Hey guys, welcome back. I hope you had a really great weekend. So last week was the first whole week post-election and it was action-packed. We had a lot of data come out and it was red across the board. We started out with SPY, SPX, QQQ, and DIA making all-time highs on Monday, and it was all downhill from there. IWM almost made new all-time highs for the first time in 3 years, but it got rejected just short of that, and SPY did open with a small gap up to make new all-time highs on Monday. After that, we did get pulled back down to the 35 EMA. Tuesday, before CPI and PPI on Wednesday and Thursday, Tuesday we chopped around this 35 EMA. Wednesday we woke up to the CPI inflation report that did show that inflation was on the rise again, but it was in line with expectations. So we did see a small push up, and just short of the all-time highs we made on Monday, we pulled back down to the 35 EMA. Thursday, we woke up to a PPI report showing that producer side inflation was also on the rise, and that pulled the market back down. And that takes us to Friday. Friday, we opened SPY with a gap down all the way to the bottom of the implied move. So the bottom of the implied move was 589, and from there, that second candle took us outside of the implied move, and we squeezed down. We did drop underneath the 30-minute 200 moving average, and then we bounced right underneath that on the 1 hour 200 moving average to close completely outside of the trading range, and we made it all the way back down to the inflation gap from right after the election the week before. So we made it all the way down to the battle zone. And same thing over in SPX. We opened right here with a gap up to start the week, made new all-time highs, and then immediately brought it back down to the 35 EMA. From there, on Tuesday, we chopped around the 35 EMA, waiting for the CPI and PPI report on Wednesday and Thursday. Thursday, that CPI report came in, showing inflation back on the rise, but in line with expectations. So we did see a pop up, and just short of all-time highs that we made on Monday, we pulled back down to the 35 EMA. Thursday, we saw producer side inflation on the rise. We dropped down to this gap right here. This is the second gap we had during election week. So this was the Wednesday gap we saw the day after election, the morning after. We pushed up, and then we saw another gap up the next day. That is where PPI brought us to, and then the next day on Friday we gapped completely outside of the implied move. So 59.10 was the bottom of the implied move, and just like in most of the other times that I've shown where we gap completely outside of the implied move, we squeeze in that direction. If it's an up gap, we end up squeezing. So if we had gapped up to the top of the implied move, we would squeeze higher. Same thing to the downside. Gapped completely outside the implied move, gave us a drop, and we did drop underneath that 30-minute 200 moving average. It did not hold as a support. We dropped down to the next level, which was the 1 hour 200 moving average, and that brought us all the way back down to the election gap. I think in SPY I called it the inflation gap. This is the election gap from the morning after the election last week. So we are back down at that level. We did find some support on that 1 hour 200 moving average. We are pretty oversold here, at least on the 30-minute time frame. The 1 hour does still look like we have room to go, and maybe I'll analyze a few other time frames in some additional videos this week. But for right now, 30-minute time frame, which is the one we usually use, we did find a little bit of support on the 1 hour 200 moving average, and we are oversold. This is on the 30-minute time frame. Let me actually just take it over to the 1 hour time frame, because we did bounce on the 1 hour 200 moving average. This is what it looks like right here, and look at this right here. We definitely still have room to go, which would take us a little bit deeper into this election gap and then this down gap that we had underneath it. I always mention when we have overlapping gaps like this, it does tend to be a battle zone, and we do fill it almost always sooner than later. So here we did get back into that level pretty quickly. So keep that in mind that we do still have room to go on the 1 hour time frame. 1 hour 200 moving average right here that we did bounce on. So SPY did close down 1.28%. Big down day on Friday. SPX closed down 1.32%. VIX at close popped to 12.8%. That is a big move. VVIX, which is very often a good leading indicator for VIX, meaning that is showing the next days, does show Monday at a VIX up 9.4%. This is not perfect, but a lot of times it does show what we see. So let's keep an eye on that. And we did not close within the implied move in either SPY or SPX. And then QQQ, we opened the week. Where did we open the week? Over here, I think right here. So this is Monday. This is the 9:30 candle on Monday. We did make new all-time highs on Monday, and then that was the high of the week. From there, we did drop back down to the 35 EMA. Tuesday, before inflation data came out, we chopped around the 35 EMA. Then Wednesday in pre-market, this is the 9:30 Wednesday candle right at that 35 EMA. So initial move was down, then we popped back up to try and make new all-time highs, got rejected right at those new all-time highs that we made on Monday, and then we dropped back down to the 35 EMA. Thursday, PPI report came out showing inflation data for producer side on the rise, which dropped us back down to this gap. This is the election gap right here, the day after. Then we pushed up that day and then gapped up again. That is where inflation data brought us back to. And then the following day, we gapped underneath the bottom of the implied move. And like I've been mentioning for months now, when we gap underneath the implied move, we usually get a squeeze down in the direction of the gap. So we did break the 30-minute 200 moving average. We also broke the 1 hour 200 moving average right here. That is huge. And we brought it all the way down to this gap, which is a huge battle zone because check this out right here. If we zoom out, we had an up gap here before the election, and this was actually 2 weeks before the election, maybe not quite as long, but maybe 10 days. Then we stayed above that gap, and then we gapped down right here. So right here, we already have two gaps overlapping. Then we brought it back up to the bottom of this gap, and then we gapped over that. So lots of gaps to fill right here. Massive battle zone. That is right where we brought it into. Now gaps are traps regularly. So gaps do pull price in. When gaps overlap like this, it is double, and in this case, triple time. So we knew we were getting pulled back into that gap. But you could see this gap right here got filled. This one got filled where it wasn't overlapping with this one, and we did bounce right on this gap right here to the penny. We bounced right there. We are oversold on this time frame. I haven't looked at the 1 hour, and because we broke the 30-minute, we broke the 1 hour. Let's take it to the 1 hour and maybe even take it to the 4 hour. So 1 hour time frame right here. We did gap underneath it, not gap underneath it, but we broke underneath it right here. And you can see right here, we still have room to move lower. So depending on how we open, we could even see this stupid Willy line. And if it does pop up, we could see this red signal line, just like right here, as a resistance. So if you have stupid Willy on your chart, watch for that tomorrow in QQQ. And let's just take a quick look at the 4 hour chart. 4 hour chart, what do we have here? So critical level right here. Stupid Willy is showing that this is where we make it or break it. If we do cross down here, this is going to bring us lower. So we definitely have the potential to bounce here or to break down. Just keep an eye on what signals we have on those three time frames. 30-minute, 1 hour, and 4 hour are going to be in play. So QQQ down a huge 2.38% on Friday, and for the entire week right here, from all-time highs to where we closed, down 3.7%. So big down week on Friday, big down week last week, big down day on Friday. And we did not stay within the implied move. In fact, we didn't touch it at all. Bottom of the implied move was right here. We gapped under it and dropped. IWM had a big down week here. We opened on Monday. Where is Monday? Right here with a gap up, and we pushed up, and we did make recent highs here. This right here is all-time highs. So this, I feel like this was a trap right here. Let's take it to 5-year chart right here. Look at that. We have not seen all-time highs in IWM since November of 2021. So we are almost 3 years exactly. We are 3 years exactly from when we saw all-time highs in small caps. So we did see that opening candle was the high of the week, and then from there we dropped back down to the 35 EMA. Tuesday with inflation data, we filled this gap, we dropped and we chopped around. Actually, we traded underneath the 35 EMA before the CPI inflation data came out. Then on Wednesday we gapped up and then immediately got pulled back underneath this 35 EMA. And if you were watching down here, look at that. You could see that we got rejected. Stupid Willie right here got rejected at the red signal line. And from there, we did trade underneath that signal line for the rest of the week and underneath the 35 EMA. We took it all the way down to the 30-minute 200 moving average into the election gap. This was right after the election. We gapped up and then pushed higher. And then we made it all the way back down into that gap to the 30-minute 200 moving average. So extremely oversold right here. You could see that we have a potential cross up right here. That does not mean we have to see a crazy bounce back up, but we might slow down here, let the indicators reset a little bit, and watching this 35 EMA and the 30-minute 200 moving average, how they interact. Because the way it looks right now is that we could see a cross down in the next 2 days, and that would be bearish. We are still, even with that huge down week, we're not bearish. We're neutral. That 35 EMA is above the 30-minute 200 moving average. We're not bearish yet. So as big of a down week as that was, we did not technically go bearish. So we saw from top to bottom down 6% in IWM, and on the day for Friday down 1.49%. Our VX came up 2.19%, and 229 was the bottom of the implied move on Friday. We closed just underneath that 228.48. So not a terrible call from options at all. If you sold bull put spreads on the bottom of the day, hopefully you took 228, 227, those would have paid. Honestly, I don't know if that would have gotten much premium. Maybe that wouldn't have been worth it. But if you looked maybe a Friday out and sold either puts to open or bull put spreads, that probably, with RVX as high as it got, probably be a good buy. And we'll follow up on that later in the week. So that takes us to DIA. DIA opened up, making new all-time highs. So we did open near the top of the implied move right here. And then that took us to, and then from there, we did pull back down to the 35 EMA. Tuesday, we chopped around the 35 EMA while we waited for inflation data. Wednesday, inflation data came out. That was the CPI report that did show inflation back on the rise. If you were looking down below, look at this. This right here, rejected at the signal line. The stupid Willie line, which is the lighter white line here, did see resistance at that signal line. And this green line smooths all of that out. And actually, we saw resistance right there. So we did get pulled back down underneath the 35 EMA. Thursday, we had the PPI report, which showed producer side inflation on the rise, and that brought us back down. Friday, we gapped down, but watch this, we did close at the bottom of the implied move for the week. So this is the small range that we had for Friday, and this is the range we had for the entire week. And 434 was the bottom of the implied move on both of those, and we closed within that. So 434.51 is where we closed on Friday. That made it DIA the only one on Friday that closed within the implied move and within the whole week. And doing DIA and analyzing DIA this way, because it only has weekly contracts, is really inspiring me to do a weekly read on all of the other ones. Because even though the implied move can sometimes go above and below, it really would give us a better upper limit and lower limit on the entire week. So I might start doing that. I think that would be really beneficial. Over here we are oversold, and it looks like we could swing back up. We are above the 30-minute 200 moving average with the 35 EMA still above that. That does make us neutral but leaning bullish. We did take it all the way back down to the election gap, and we actually bounced right on it. All right, so that was a quick recap of last week. Definitely a historic week, definitely a historic month. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you get notified every time I post a new video. Today, I want to ask you guys a huge favor. If you benefit from my content, share this video today, please. It helps me grow my channel. It helps me reach more traders, and I want to be able to bring you guys more content about more ticker symbols, intraday moves, live events, and I need your help doing that by helping me grow this channel. So share this video, share it on Stock Twits, share it on Twitter, share it on Facebook, share it on Reddit, share it on Discord. And I'm going to go ahead and end this video here so I can work on tomorrow's trading ranges. They will be up on TradingView, and I also will be doing a follow-up video before market opens. So make sure you have notifications on so you don't miss that before market opens. And if I don't see you until tomorrow night, have fun, trade safe, make sure you take profits when you're up, and I will see you guys really soon.